Many thanks. Yeah, so moving from the private sector into the public sector has pros and cons. I've always been a very enthusiastic investor in some fintech ideas in Germany. And certainly, I always thought the compliance rules in the private sector in a highly regulated banking industry were tough. In order to get approvals to invest in fintech companies and clearing all the conflicts and et cetera, et cetera. But of course, the ultimate conflict of interest is when you become responsible for the area of financial markets, regulation and supervision and policy. That had meant then immediately that I had to dispose of any kind of fintech investment, anything that was remotely close to that. And of course, also swear that I, during the time of office and cool-off periods, will not engage in any kind of fintech investing. So that, I would say, is definitely a drawback, but certainly the period where I was able to do these things taught me a lot about the dynamics of this industry and the fascination of this city and many others in Germany that are really proving to be fertile ground for the development of the fintech industry. So in that sense, I'm also very happy that we're here today and getting support from the financial industry on the one side and Bitkom on the other, focusing on this topic. So that's very encouraging. I would also like to underscore what the previous speakers have all said on Europe. I mean, this is really a key initiative that the German government has in terms of its European policy, because there's one misperception, I think, in Europe, namely the misperception that we have a common market across all goods. Is maybe true, but what is not true is that we have any kind of a truly perfected common market for services in general, but financial services in particular is something where Europe is still very, very fragmented and segmented and isolated and certainly not in a big internal market. And I fully agree that there is no surprise that these business models that require scale, that require that generate platform economics, that generate positive externalities from adding users have grown in scale in the two regions of the world that are sizable in terms of their population and economic power, but also efficient in terms of figuring out how to generate an internal market that allow businesses to scale quickly. And that's certainly something that Europe has to work on quite substantially. My favorite stat is always the European Union with 17 trillion of GDP versus the US with 19 trillion is reasonably close. The equity market cap of the US is 32 trillion, that of the European Union is 8. So that's where really things fall apart, and that is sort of the genesis of where the competitive disadvantage in terms of exit channels starts, but it also evolves into a lot of these rules and fragmentations and segmentations that we have in a lot of your clients, namely the banking and insurance industry, but also for you as service providers in terms of still national specificities of markets, as if language barriers weren't enough, right? We also burden the industry with additional barriers. I don't think we can do much about the language barriers, and those might actually be quite additive to the cultural diversity and everything, but all of the rules and regulation and the exemption and the options and national discretions is something that we'll work on very hard, both on the side of the banking union, where we've made some progress, but we have a lot of ambition for the new commission and the collaboration between the finance ministry, the commission and the other member states to really move ahead to the next level of integration in banking union going forward in the next few years. But also our initiative that the finance ministers of Germany, France, and the Netherlands initiated last week to put the capital markets union at the top of the agenda of the new commission is really another initiative to work on this issue of fragmentation and segmentation that we have and the lack of equity and growth finance, because I think That's something that we can all agree on very quickly, as long as this equal GDP but unequal equity market size exists. Growth finance will be harder to attract and generate and grow in the European Union. So I think those are things that we have to work on. There is definitely commitment there from all sorts of coalitions of member states in the European Union. So hopefully that will drive new impetus. The good news is we're ending the current Commission's tenure on a very, very positive note. We've made very substantial steps forward on the banking union, with the banking package being decided, which gives us further integration, with the strengthening of the European Stability Mechanism, with a lot of projects going on that will integrate the European Union further in banking, but also the Capital Markets Union, where we've worked massively hard on getting legislative proposals through over the past year, and we've increased the pace of passing those legislative proposals quite substantially. So we now have rules on pan-European pension products, on small SME and investing, on crowdfunding, on the FinTech Action Plan, on sustainable finance, on European rules for covered bonds. So all sorts of financing instruments where we're seeing that they may be technical at an individual level, but in aggregate, they really show that Europe is moving ahead quite substantially. And of course, that is enormously important for us in Germany, because we will be small in the world unless we become big as Europe. I think that's the key insight for our European policy. And so for our international competitiveness, the whole issue of moving forward the capital markets, the banking, the digital agenda in Europe are all very complementary elements. So on all of these notes, the fact that also the German banking industry is embracing change and is embracing initiatives, just like in today's newspapers, we could read that there is now a major initiative by the German banking industry on payments. All of those developments show that Germany is embracing this change and trying to get to the forefront of this development that, in our view, is characterized by 4 key elements: flood of new data being produced, the speed of data processing, the speed of the internet, the cheapening of data storage and the opportunities and challenges that brings, decrease in hardware prices. All of these things are also forcing us to embrace the speed of change and to work with the impact all of that has on banking. The basic tasks of banking are the same, and actually we've seen through all of the post-crisis reforms and incentives and capital changes that have taken place, the simplification of banking models is actually gaining ground relative to the complexity that we saw pre-crisis. The mood has certainly changed in terms of the global priorities for banking regulation, but that makes it all the more important to provide those services efficiently. And of course, as efficiency becomes more and more important, scale is also more of a driving factor. And of course, all of these impacts lead to digital technology to becoming more and more essential, more and more vital to the competitiveness of the European banking industry. Outsourcing is a huge topic for us, both in the legislation that we've passed from asset management to insurance to banking. We've made absolutely sure that we protect the ability to outsource, both within the European Union and between the European Union and third countries. What we've done is to resist the temptation of playing location policy on that. We think maintaining the efficiency of the opportunity to outsource is absolutely vital. It's extremely important for many of your business models, so we will continue to prioritize that. Things like banking as a service is something that there's some very interesting business models developing in Europe, allowing fintechs to use their licenses. So in that sense, this could become a new business model both for incumbents and for freshly started platform banks. Open banking has been addressed. I think we've been proactive around the whole PSD2 legislation. We will continue that. There's been an interesting interview with the board member of the Bundesbank, who we're working with extremely closely on driving this initiative for European payments, to be really at the forefront of this and to position Germany as a leading force in the European context on payments. And of course, on the other side, what we are monitoring closely is all of the pros and cons of the entry of global technology companies into financial services. On the one side, of course, additional provision of services is a positive. On the other side, what we are looking for is non-discriminatory access with regard to these players, and on the other side, avoiding any impression or reality of regulatory arbitrage, because we do think it's important that there is a uniform single rule book and that the playing field for everyone is fair and level and gives everyone an equal chance to provide services. Of course, fintechs play a very large role in this process, even though recent studies show that the much predicted disintermediation is taking quite long. But as we all know, in industries characterized by heavy disruption and by a lot of change, that can move very quickly. But on the other side, we see many, many examples within Germany that the collaboration and the joint business models between incumbent bank services providers, insurance providers, and fintechs can also offer a very, very interesting combination. So in that sense, the federal government, I think, is very well aware of these trends and movements. The question is, what are we doing in terms of developing strategy? So on the one side, in terms of policy objectives, the German coalition agreement is certainly a move forward in terms of prioritization of digitization across the board in all areas of the federal government, going from finally catching up on the gap that's opened up between some smaller member states who are much more proactive with digitization of citizen services by the public sector, to e-passports functionality. And anyone in Germany who has the e-passport has to have these little machines in addition to open up any additional services. The services are limited. When I check with my Estonian colleague, it's absolutely fascinating what you can do in Estonia with digitization of public services, which of course then creates second round effects and third round effects, which can become very interesting. We get it. And I think Germany gets it, that we've been slow to respond on that, and that we really need to catch up and view digitization not only as a sort of industrial policy objective to create jobs with new startups, but also as something where the public sector, if it embraces this, can also give an interesting impetus to investment in the private sector and startups. So in that sense, I think it's very good that this is evolving. Our financial market supervisor, BaFin, has also been at the forefront of some of these developments. The BaFin was one of the first regulators globally that published a very comprehensive report on big data and artificial intelligence, is consulting that with the public, and many of you have contributed to that, because BaFin wants to understand, A, the business models of the entities to supervise so that we can become more intelligent in how we do that, but on the other side, of course, also use the benefits of big data and artificial intelligence to improve the supervisory process. So it's a double positive, I would say. Then, I mean, it's been mentioned before, the Federal Ministry of Finance has our FinTech Council. I'm very proud to be responsible for that as well. And now that all conflicts of interest have been cleared, I'm allowed to do that. I'm also very happy that our big reform of the FinTech Council to make it more independent. I've given up my chairmanship of the FinTech Council, and Chris has generously offered to take over, because we just said if this is a council that's supposed to advise us on an independent basis, it makes absolutely no sense that basically the person being advised is also chairing the FinTech Council. So we've opened it up. We've reduced the role of the government in that, basically kicked out anyone who's in government and made them observers, including myself, so I get to attend still. But the show is now being run by those who actually know what's going on and who have a view and are actually providing enormously positive impact, advice on things like cloud services, the general data protection regulation and the interaction of GDPR with a lot of the financial industry elements that we're looking at, PSD2, blockchain strategies, so all sorts of very interesting things. The regulatory approach in all of that, I think, which is very important for us, is that we want to remain technologically neutral. We don't want to create biases, neither for incumbents or try to privilege certain technologies. We think that our job is to provide a framework, to provide reliability, to of course incentivize investment, but not take any business judgment views or pretend like the government has a clue about taking business judgment views. So in that sense, I think what we try to do is to promote this unbiased approach. One initiative in this context that we're somewhat proud of, because it's tricky, it's innovative, and it's with a few exceptions of governments who have tried it, is to create fully digitized debt securities. So that's an approach where we've just published a paper which basically gives the guidance of what we want to do here. Because at the moment, the corporate sector and the financial industry is telling us that distributed ledger technology, combined with the efficiency of fully digitized securities issuance, transaction trading, custody process, can be very efficient, but of course the way it's working right now, all of the processes are actually trial and error, where you can show the efficiency of creating fully dematerialized securities, and it actually works, and there's been examples of that. However, at the moment, given that there's no rules and regulations that provide safe transfer and custody and all of the details that you need, basically everyone who's engaged in this field is having to do a dual approach, namely on the one side doing everything in the digital world, and at the same time simultaneously living in the physical world. So of course it's more of a trial period, or you import legislation from other countries. So all of these things work, and they're promising. And they're promising enough for us that this whole idea of replacing the traditional world of physical certificates with a purely digital model of issuance and transfer and trading is something that is fascinating enough to us that we've launched a legislative process that hopefully will lead to a positive incentive of this market setting up in Germany, and it'll of course entail quite a lot of investment and ideas and activity in the distributed ledger space. A lot of complexity, of course, in the legislative process, and you can imagine if you've ever taken a course on the Bürgerliche Gesetzbuch, which is our basically the basis of our legal system and all the civil law, and figuring out how to make sure that the transfer of securities without the physical certificate works on a reliable basis is not trivial. So I don't want to make any promises that this will get done in 2-3 months, but we're working on it, we're prioritizing it. We decided to focus on debt securities first, Equities are much more complex because of all the corporate actions involved. So we'll do the debt securities first and look at equities and loans later. But of course, we fully understand if you look at the whole process of loans and transferring them and documenting them, a huge amount could be gained in this area as well, at least potentially. But that's more the second, third stage. But of course, all of this fits into very nicely the German blockchain strategy, which is a government-wide initiative where we're also working on a public consultation. Many of you have participated in these initiatives, so many thanks also specifically to Bitkom for your contributions, but also many of you individually. The response that we've gotten is enormous. We've literally gotten hundreds of ideas and comments and proposals, so alone that shows that launching the blockchain strategy as an idea is quite a positive development, because it's certainly highlighted the focus of the German government on this, and the fact that we're getting a lot of international response shows that this is a good thing. An additional initiative that has happened in this area of digital securities is our supervisory authority, BaFin, in 2019 approved the very first securities prospectus for an STO securities token offering in Germany. So in that sense, that's another initiative that has taken place, and that is somewhat commensurate to the other things we're doing. And we're actually seeing securities prospectuses for other STOs are also being reviewed. So there does seem to be quite substantial interest in this topic. Of course, we're also very involved in the topic of cryptocurrencies and crypto assets. The Budget Committee and the Finance Committee of the German Parliament have looked at this very closely. Of course, BaFin and the Finance Ministry are looking at this closely. And what's really important to us is, on the one side, being transparent. BaFin was praised in a positive sense for being open and transparent, and at an early stage also informing consumers about the risks inherent in some of the ICOs that we've seen. And on the other side, we have a very intensive discussion on the classification of ICOs as financial instruments. So those are also things we're working on, and that will be a core element of our discussions going forward. The other big topic, of course, that we have in Germany is the whole discussion about strengthening our financial market in general. Sometimes that has been reduced to the issue of strengthening the banking sector. However, we've said in many cases that it's not only about strengthening the banking sector and attracting Brexit banks to Frankfurt, which is good and it's important, and I'm sure quite a few of the Brexit banks who have opted for Frankfurt as the hub of their European Union operations, we're getting close to 50 now, will become clients and partners and investors in some of your business models. But we've also said that this is a much more comprehensive approach. So we don't only want to talk about, and we don't only talk about banking in Frankfurt, we also talk about the insurance sector, the asset management sector, and very important for the development of the digital financial industry, we also talk a lot about and think a lot about how to attract more venture financing to our country and to generate within the German capital markets and the investment pool of our institutional investor base stronger incentives to also diversify into venture capital, which is certainly an area where Germany is under-allocated in terms of our institutional investor base. And given that we know from the US and China and other markets that there is always a very natural home bias to the way venture capital is deployed, I think it's also very natural that Europe in general and Germany in specific also has to think about how to develop an incentive scheme of how we promote stronger allocation of our institutional pools of money into venture finance and venture capital on the one side just as pure healthy part of strategic asset allocation diversification, but of course also as a source of diversified returns. So that's something that we are looking at very closely as an incentive to increasing investment. But of course, as very often, and the US being a free market economy is not immune to having sort of initial investments coming from the public sector. So in that sense, we're also not shy at all to deploy public funds in selective format into venture investing. So many of you, of course, have had interaction with the various programs of KfW, our promotional bank. We are very supportive of the European initiatives around the EIF fund of funds. We are very proud that we have the so-called high-tech Gründerfonds, which is an instrument to set up early-stage investment. And as part of the analysis that we did about the strengths and weaknesses of our venture industry, we recently endowed KfW and increased the size of KfW's investment into fund of funds to increase the availability of late-stage finance, which is a weakness in Germany, to 200 million euros, which of course you can say is a small drip in comparison to the billions that get invested in the US. But on the other side, we are also very clear that the idea that we have in this is to initiate investment. We don't pretend like the government is the right source of capital allocation for this. So this is more an impulse and support and show that that we need to push the accelerator button here. So in that sense, the other element, by the way, that we are looking to promote is venture debt. That is an area that has been also underallocated when we compare Germany to other jurisdictions, particularly the US. So in that sense, venture debt is another initiative that our KfW funds are starting and increasing. So in that sense, we're really engaged and active in all of these areas. So coming to the closing remarks, of course, the European initiatives are things that I said at the beginning. We are enormously supportive of the interaction between the Capital Markets Union strategy and the FinTech Action Plan of the European Union and the Commission. We think that as I said, some progress has been achieved, but specifically with respect to the FinTech Action Plan, of the 19 steps to develop innovative business models across the EU, we haven't really moved the needle on a sufficient number. So I think we very much welcome the FinTech Action Plan. We want to promote it. But you can take this as a commitment. Germany has the privilege of getting the European Union presidency in 2020. And so we will make the implementation of the FinTech Action Plan one of our key priorities in our Council presidency in 2020. And this city here, in the second half of 2020, the time of our presidency, will really see a lot of initiatives and attempts to move the FinTech agenda forward. And the group that I named at the beginning between France, Germany, and the Netherlands is also in agreement that this is a really, really important issue. Removal of the existing cross-border barriers, AML-compliant cross-border identification measures, technology-neutral European legislation for these things like digitized issuance of debt securities. Huge debate that we had: should we even do something national or do something at the European level? Because the waiting period for this thing to go through at the European level is too long for us, we decided to move ahead, but we're doing it coordinated with other European member states so that if and when the European Union decides to harmonize rules, the step in that direction won't be too painful. So in that sense, I think it's also extremely important. And of course, all of the topics that I mentioned about level playing field between incumbents, fintechs, and big techs, Needless to say, the European Commission and especially the competitive authorities are key to achieving this fair and equitable market of level playing fields. So that's a forceful tool that the European Union has, and I think it's important that at the European level, all of the debate we're having around competition policy 4.0 takes into account the very, very simple topic of this level playing field and making sure that everyone has non-discriminatory access. So in that sense, this is an important thing that we're promoting and that we will promote during this unique opportunity of our Council presidency in 2020. So in that sense, to end on a note of the current European debate, we really think we've made quite a lot of progress. We're proud that Germany has contributed quite substantially to a lot of the elements of this progress that we've made, but specifically for services in general and financial services, digital services in particular, we think there's still a huge road forward, but that is promising for all of you because it'll create a lot of business opportunities. So with that, many thanks, and probably I'm the last speaker with a tie, and enjoy the 58 further ones coming ahead. I wish I could listen to all of them. Many thanks.